So we have completed section 54 in the previous class. In this class, we'll move on to section 54B. 54B. Here, the asset transferred being urban agri-land. In case of rural agri-land, it will not fall under capital gains at all, so you don't need to worry about that. In case of urban, then capital gains will be attracted. And for claiming the deductions under section 54B, you can buy new agri-land. The newly purchased agri-land could be in rural or urban, doesn't matter. Applicable for individual and half only. In case of 54B, long term or short term, whatever it may be, you can claim the deduction under section 54B. Provided, to prove that it is an agricultural land, you need to use it for agricultural purpose at least 2 years earlier, either as a owner or as a tenant. Okay, because 2 years and more, automatically it comes under long term. But even short term is also eligible, provided the main condition is 2 years it should be used for the purpose. And the new asset should be purchased within how many years? 2 years. Just similar to section 54, where house property sold and house property purchased. In section 54B, urban agri land sold and agri land purchased. The capital gain could be long term or short term, applicable for individual and half. And this land should be used by him or her parent for at least 2 years. Is that okay? Within how many years you can finish up purchasing means 2 years. Just similar to residential house property can be purchased within 2 years. Similarly, here also within 2 years you have to purchase. Such purchased assets should be used by yourself without transferring for at least 3 years. Otherwise, the exemption given will be withdrawn. That's all. Now let's see. Mr. SSA earned long-term capital gain 20 lakhs. Okay. On transfer of urban agricultural land and acquired urban agricultural land for rupees 10 lakhs in the assessment year 25-26. Then they purchased one more asset. Okay. So minus deduction under section 54B. How much is that? 10 lakhs can be deductible. Now, taxable long-term capital gain in this case being 10 lakhs. Clear? The newly purchased agricultural land is sold on 1/7/25 for rupees 50 lakhs. Sale consideration 50 lakhs. It is sold within the short duration. The newly purchased agricultural land should be held for at least 3 years. This is for the previous year 24-25, assessment year 25-26. And in the previous year 25-26, assessment year 26-27. Here the sale consideration being 50 lakhs. Sale consideration being 50 lakhs minus what is the cost of acquisition? The cost of acquisition being 10 lakhs, but you have claimed deduction under section 54B in the earlier years means that should be subtracted to the extent of exemption claimed. So 0. The entire 50 lakhs will be considered as now short-term capital gain. Short-term capital gain. The newly purchased asset should be kept for at least 3 years. If it is not so, automatically the deductions claimed already with respect to the same asset is subtracted from the cost of acquisition for the subsequent calculation of capital gain. Here, clear? Hope now you'll be able to understand this one. 50 lakhs. Shall I move on to the next one? Now, (54D). In case of 54D, transfer of land and building used for industry purpose or industrial undertaking. But it is compulsorily acquired by the government. Compulsorily acquired. So land and building for industrial purpose will fall under section 54D. This will be applicable for all the SSCs. Is that okay? Industry may not be run by single person. Okay, sole trade not possible, half not possible. As it is being the industry, any SSC can be applicable here. All SSCs. And then the capital gain could be in the nature of long term and short term, provided this land and building should be used for the industrial purpose at least for the 2 years before it is compulsorily acquired. And new asset purchased for eligible for claiming the deductions being again land and building for the industry only. So house property sold, house property purchased, agri land sold, agri land purchased, land and building for industry purpose compulsorily acquired and purchased to that. Now, in case of construction, 3 years, right? So similarly, land and building for industry purpose requires more period for construction. So 3 years will be given. After the transfer, 3 years is given. Okay, within the 3 years, you can finish off investing this money for purchasing new land and building. Okay, either it may be purchase or installation or construction, whatever it may be, everything can be deductible. That asset should be kept for how many years? 3 years. So, in case of agri, to prove it should be used for agri purpose at least 2 years. For this industry, it should be used for industry purpose at least 2 years. These are the same logics like. Now, let's see an illustration for 54D here. SSA Limited purchased a land for industry undertaking in May 2007 at a cost of rupees 3.5 lakhs. The above company was compulsorily acquired by the state government at a compensation of rupees 12 lakhs. So, sale consideration B, the compensation received, which is 12 lakhs. And in the month of January 25, so after 23rd July, we don't have the rights to index it. So, we assume we don't have the indexation. Minus cost of acquisition in this case being 3.5 lakhs. The compensation was received in February 2025 and the company purchased another land for its industrial undertaking at a cost of rupees 2 lakhs. Anyhow, you can subtract this. What's the value you are getting? Long-term capital gain in this case being 8,50,000 rupees. Minus deduction under section 54D. How much deductions can be claimable? 2 lakhs can be claimable. 2 lakhs can be claimable. What is the amount of the capital gain chargeable tax in the hands of the company? Also calculate the taxable capital gain if the land for industrial undertaking was purchased in May 2024. But already it was used for an industrial purpose for 5 years by the seller. Right, what happens here? The land for industrial undertaking was purchased in 2024. Now, sale consideration is nothing but compensation receipt. This is the final scenario. Taxable long-term capital gain. Here the cost of acquisition or acquisition made in 2007 May. Sale consideration being 12 lakhs minus cost of acquisition. Assume that the date of acquisition in the option 1 being May 24. May 24. So from the May 24 to the date of compulsory acquisition, it is less than 2 years. To qualify the deduction under section 54D, that land and building should be used for the agricultural purpose by the SSC for at least 2 years earlier to that. So now he purchased just now, matter of 1 year lesser. But he used it for his own purpose as a tenant earlier. Okay, already it was used for the industrial purpose. Okay, then also you will be eligible for claiming the deductions of rupees 2 lakhs. So the cost of acquisition being 3.5 lakhs, 8.5 lakhs long-term capital gain, and you can claim the deduction under section 54D, which is 2 lakhs. Then finally, the taxable value being 6.5 lakhs. Taxable. Option A. Option 1. If the land for industrial undertaking was purchased in May 2024, it was not used for industrial purpose, then you will not be eligible. So in case of option 2, 12 lakhs, 3.5 lakhs, 8.5 lakhs, you cannot claim the deductions. The entire 8.5 lakhs will be taxable. Is that clear? Hope now you'll be able to understand. Even if the land is used for industrial purpose by the previous owner, also be eligible. Okay, also be eligible. Shall I move on to the next one? In case of 54 EC, sale of land and building or both. By whom? All. What sort of income? Long-term capital gain. Okay, land or building. Land or building. If you are selling the land and building, maybe residential house property, or it may be vacant land, whatever it may be, or any other thing. Is that okay? Purchasing again one more house property will fall into section 54, but here not required to purchase the house property under section 54 EC. Any capital gain you receive can be invested in the bond issued by RECL, PFCL, NHA, IRFC, Rural Electrification Corporation, Power Finance Corporation, National Highway Authority, Indian Railway Finance Corporations. So these are the 4 government PSUs. In that you can invest. The maximum deduction says only 50 lakhs. In case of section 54, the maximum is 10 crores. Similarly, in case of section 54 EC, maximum 50 lakhs. Selling the either land or building, but investing in the bond, then EC will be applicable. Of course, in section 54, it should be residential house property, where that residential house property either may be used by yourself, where self-occupancy also be falling under income from other sources, house property, or let out for commercial or residential purpose. Then automatically it falls under section 124, income from house property. If I use the house property for my own business, it will not fall under income from house property, right? If the own property is used for my own business, I cannot claim the income or expenses, whatever it may be related to the house property under section 24, but can be considered as a part of expenses in PGP head. You are eligible for claiming the depreciation. All the maintenance expenses can also be debited. So, including depreciable building, that building or land used by you for at least 2 years and more. Okay. In this case, you can after the sale, whatever the profit you get, that can be invested in the RECL and PFCL, NHA, IRFC. In all these cases, you can invest. That investment should be within 6 months. Within 6 months. Okay, ADC. So you can invest that money within 6 months. In case of construction of house property, it takes time. Purchase of the house property also takes time. So 2 years, 3 years given. But in case of investments, it's only bond, go and pay money and get the bond. It's a matter of 6 months. From the date of sales, within 6 months, you have to invest in the bond, else you are not eligible. And that bond should not be transferable within 5 years. Earlier, we have 3 years, but here, 5 years. The lock-in period of investing that in the RECL, PFC, and all these bonds, for 5 years. You should not transfer within 5 years. Apart from that, you should not pledge for borrowing loan also. Should not withdraw, and you should not pledge for borrowings also. In these 2 cases, the amount will be disqualified automatically. In that year of disqualification, it's going to be taxable. Clear? Transfer the new assets within 5 years also disqualifies. Borrowing, keeping this asset as security also be disqualified. Let's see the illustration for 54 EC. Mr. SSA earned a long-term capital gain being 2 crores, transfers residential house property and acquired RECL bond. Okay, it may be residential house property or any bond. Okay, any house property. Now you can subtract the deduction under section 54 EC. If you sell the house property and buy the house property, then section 54 will come. Sell the house property and buy the RECL bond, and it will come under section 54 EC. Can I sell the house property and buy house property as well as bond? Yeah, of course you can do both. Then you will be eligible for claiming the deduction to section 54 as well as 54 EC, both. Both will be eligible. Here, this value being 60 lakhs. Okay, now the value being 140 lakhs. Provided the bond was redeemed on this date, so misused. So once it is misused, the deduction given will be considered as gain, capital gain. Short-term capital gain will be arising there. Is that okay? Though it is 60 lakhs, how much is deductible? Sorry. Restriction, the maximum possible being investment made or ceiling 60 lakhs and 50 lakhs. Whichever is lower is deductible. 50 lakhs is deductible. So 150 is the taxable capital gain. Taxable long-term capital gain. In the previous year, 24-25, an assessment year 25-26. But in the next previous year 25-26 related to the assessment year 26-27, this was redeemed. The holding period is there for 55 years. Within 5 years it's sold, the deductions already claimed will be your capital gain, long-term capital gain. The exemption availed from the long-term capital gain becomes again withdrawal, then it is taxable as long-term capital gain only. Long-term capital gain only. Is that clear? Hope you will be now able to understand section 54 EC. Clear? So the last section 54F. Before I go for the last section, I'll just give the summary of all these sections. I'll give the summary of all these sections. Come on, tell me. Section 54, 54B, 54D, 54EC. These are the four predominant sections we have covered. Right. What asset transferred? Residential house property falls under section 24. PG, income from house property. This one, urban agri land. This one, land and building for industrial undertaking compulsorily acquired by the government. 54 EC, land and building, even including residential house property, Now, what sort of asset you have to purchase? Asset purchased. Residential house property to be purchased. Agri land, not being urban agri land, it may be rural or urban, whatever it may be, can be claimable. And here again, land and building can be purchased for the industrial purpose. In the last case, bond, RECL, PFCL, and NHCA and IRFC. Okay, you can buy the bonds, but here only we have the ceiling, maximum 50 lakhs only can be done. And for whom this will be eligible? House property is eligible for Hindu undivided family and individual. Is that okay? Urban agri land also eligible for individual and Hindu undivided family. Industry, naturally it falls under all the SSCs. 54 EC also falls under all the SSCs, like let's see. Right. So because EC is related to what? depreciable land and building also. Who can claim the depreciation? Business people. Business is not run by single person, maybe firm and company also, so eligible for all the SSC. Right. Now, what sort of capital gains eligible? Capital gain. Usually, in case of house property, long term, and this one is also long term. When these two are there, then all will be taken. Long term as well as short term, both will be taken. Clear? These are the key points you have to understand. And when to purchase? When to purchase? In case of buy, date of transfer before that 1 year, after that 2 years. In case of construct, 3 years time will be given. From the date of construction, 3 years time will be given. So if the long term capital gain being less than or equivalent to 2 crores, 2 residential house property eligible, else only 1 is eligible. That too, this is available only once in a lifetime. And maximum 10 lakhs can be deductible. 10 crores will be eligible, right? And in case of 54B, is that okay? Now, agree land from the date of transfer within 2 years you can buy. In case of land and building used for industrial purpose, from the date of transfer within 3 years you can buy. In this case, within half year you have to buy, or 6 months you have to buy. Within 6 months from the date of transfer. Clear? Now, what is the condition? Should be held, the new asset should be held for 3 years, 3 years, 3 years. Here, 5 years and one more condition, no borrowings by keeping this as security, no loan using this bond as security. Using this bond as security. These are the predominant cases you have to keep in your mind. So 54, house property, 54B, food, agree, and 54D, car, industry. What do you want? Food, then first house and then food and then car. So 54, leave A, B, leave C, D. EC, equity share. Share spelling CHARE. So now you can easily remember EC represents share like bond. Okay, 54, 54B, 54D, 54 EC. So the duration of investment, the period within which you have to invest in case of 54 EC is very short. Within 6 months you can invest. Within 6 months you can invest. Is that clear? Hope now you'll be able to understand. Now, finally, I had to go for section 54F. 54F is one of the interesting sections. Here, any assets other than residential house property, not being house property, what happens in case of middle class people? Is it possible to purchase a house property in single shot? Naturally not so. Then how the most of the investors plan? They purchase now and then small amount of gold or some shares and all now and then. For every occasion, they will purchase this as a gift and they will accumulate. The moment they plan to go for purchasing the house property, they sell all these assets, gold, shares and all. Why? They want to purchase the residential house property. We don't have the residential house property. For them, this section is there. You don't have the residential house property, but you have other than residential house property you're selling and making the profit. Can I claim the deductions for this? Yes, of course, but you can purchase the residential house property here. Maximum one residential house property you may have earlier. After purchasing, you need to have maximum two house properties only, not beyond that. If you have more than two house properties, you are not eligible for this. Two or more, you are not eligible. Only one house property is eligible. Okay. It's for middle class people to motivate them to purchase their own house. Invest in stocks, invest in gold and all. Okay. You can do all these things. You can also have the habit of investments. Huh? Do you have that? Huh? Always. You can start invest small. Even you can buy the gold for 200 rupees, 300 rupees, and gold bees are there. I could still remember one of my friends, my relative's friend. He has a habit of investing just 100 rupees for the purchasing gold every day. Every day he spends 100 rupees. Now he has around more than 3 or 4 kgs of gold. Per kg today, roughly 1 crore. Pure gold is 1.2 crores. So almost 3.6 crores. Like, you can also start invest 100 rupees per day, but not exactly gold. Gold bees you can invest. Okay. So every day 100 rupees. Today you thought to go for purchasing a junk food, tempted. Stop. Deposit that 100 rupees in purchasing gold bees. Sometimes later, your body will also be fit enough and your mind will also be happy seeing the amount accumulated. Okay. Later period, you can sell it. All the capital gains what you get can be used for purchasing a big property. Right. So 54F is all about this one. Other than residential house property, you have accumulated small amount in investments like shares and gold, and you sell all and buy. Yeah, of course, it is also meant for purchasing the residential house property. Then this maximum condition, 10 crores is applicable. And what about this? The same condition will be applicable here. You can purchase one residential house property, okay, earlier or 2 years later, or within 3 years you can construct, but not two house properties. To enjoy section 54F benefit earlier, to enjoy this, you may have no house property or you may have maximum one house property. If you have two house properties, you are not eligible. You are not eligible. Is that okay? Hope now you'll be able to understand. So what are the preconditions here? Own residential house property not more than one here. New assets being one residential house property, maximum deductions enjoyable being 10 crores. What asset you have to sell? Assets other than residential house property, including plot. You can purchase or construct. Then what about the final withdrawal condition? The same condition like 3 years. What is that? The newly purchased residential house property will not be sold within 3 years. Not only that, one more condition is there. What is that in one more condition? What is that one more condition? You need to have maximum one house properties before this. After enjoying 54F, if you purchase two house property, then it's violation only. No. See, you should not purchase or construct another house property other than this one later on within 2 years or 3 years. Within 2 years or 3 years. 2 years is for construction. Construction 3 years, purchase 2 years. So the same condition is applicable here. Apart from that, maximum one house property only you need to have. So that you should not purchase one more new house property within 2 years or should not construct new house property within 3 years. Okay. So let's see. In case of 54F, for purchasing of what? Residential house property. For whom this one is needed? Very good. Now you'll be able to understand easily. This is available only for them. And asset transfer being any assets other than land and building. It should not be land and building. Right. What sort of capital gain it should be? Long term. What the asset you purchase? Residential house property. Long term. Apart from that, what is another condition? You can own residential house property less than or equal to 1. Either you can have 1 or you have no. Then also you can enjoy. And the period of investment being ditto like this one. What is that? In case of buy, okay, 1 year earlier from the date of transfer, 2 years later. In case of construction, 3 years from the date of transfer. Date of transfer. Apart from that, what? Maximum 10 lakhs is eligible. Maximum 10 lakhs. Sorry, 10 crore. Okay. Still the C is not registered in my mind. Okay. So 10 crore. Clear. Now what more condition? The same 3 years condition is there. But for this only we have been given one more condition. If this condition also violated later on, also disqualified. Also disqualified. As per this one, you should not buy one more house property within 2 years or construct new house property within 3 years. Okay, hope now you'll be able to understand two additional conditions laid in section 54F. Under section 54F, the deductions claimable will not be like the earlier case. Here we will be eligible for claim the deductions only proportionate basis. What is that? Let's see. Let me explain that concept here along with an illustration here. In case of 54F, proportionate exemptions only will be available. Let's see here. What is that? Cost of jewelry sale price. Sale consideration being 13 lakhs minus cost of acquisition sold on this period. So you cannot get the indexation. So cost of acquisition being 4,52,000. Expenses on transfer is there, 7,000. Sorry. Expenses on transfer, 7,000 rupees. 12,93,000 will be the net sale consideration. Minus cost of acquisition, 4,52,000. Long-term capital gain being 8,41,000. So 8,41,000. And you can claim the deduction under section 54F. 54F. So you invested 5 lakhs rupees in purchasing new residential house property. Now the question is, can I claim the deduction? No, you are not eligible for claiming fully. Proportionate deductions. What's that? Long-term capital gain divided by sale consideration, extent of your investment can be deductible. This is called proportionate. See, what's the purpose of selling the jewel, gold, shares and all? Sir, I saved the money slowly for my long period of my life to purchase a residential house property. I sold and purchasing. Then you have to use all the purchase consideration, sale consideration for purchasing. Not only the capital gain, you have to use full sale consideration. What is the full sale consideration? It is nothing but net sale consideration. Net sale consideration being 12,93,000. Out of 12,93,000, how much you invested? You invested only 5 lakhs. You can actually write this way also. This is how the formula is given. Okay. Investment to the extent of net sale consideration to that ratio of long-term capital gain is deductible. So multiplied by long-term capital gain being 8,41,000. You can put the NSC here as well as NSC here, no problem. Okay, usually in the text it will be shown here, but I use that here. Okay, the difference is uh, pretty important for subsequent calculations. Yes, come on. What's the deductions you can claim? 3 lakhs 213 is taxable long-term capital gain. Taxable long-term capital gain. 5,15,787. See, the newly purchased residential house property should be kept for at least 3 years. If you sell within 3 years, then automatically deductions given will be withdrawn. Also calculate capital gain if the newly purchased residential house property is transferred for 6 lakhs in financial year, this one. Sale consideration being 6 lakhs minus cost of acquisition. What's the original cost of acquisition? 5 lakhs. Balance 1 lakh is considered as short-term capital gain. Sir, earlier, if it is disqualified means 5 lakhs minus deductions is subtracted, balance is taxable. No, but here it's not so. You can take the actual cost of acquisition as it is. But the deductions earlier claimed, is going to be taxable as long-term capital gain in the year of disqualification. So, until the earlier section, we subtract and calculate. But here it is not so. You can subtract the original cost of acquisition. The deductions already claimed will be considered as long-term capital gain in the financial year 25-26, assessment year 26-27. Clear? Hope now we'll be able to understand this one. Section 54F. In case of section 54F, we follow proportionate deductions. Shall I move on to the next one? Sonu has jewellery acquired on 17/7/2015 for rupees 5 lakhs. On 18/8/18, Sonu incurred improvement expenditure on such jewellery by adding diamond to it worth rupees 3 lakhs. On 18/8/24, he transferred such jewellery to his friend Monu for rupees 40 lakhs. So, sale consideration being 40 lakhs. Minus cost of acquisition being 5 lakhs and cost of improvement being 3 lakhs. Sonu already has occupied house property in Lucknow. However, 17/3/25 he purchases another residential house property. Already he has one residential house property. Okay. What is the condition? Should be less than or equal to 1. Yeah, of course, it is equal to 1. And apart from that, he purchased another one for 30 lakhs for the purpose of letting out. Okay. Now, from the sale consideration, if I subtract, then I will get the long-term capital gain. 8,000 rupees. What is the value I am getting? 32 lakhs. Sale of jewellery and purchasing the residential house property, then you can claim the deduction under section 54F. Deduction under section 54F. Proportionately. Is that okay? 30 lakhs for the purpose of letting out. Okay. Now, what's the formula? Long-term capital gain multiplied by net investment made out of net sale consideration. Long-term capital gain being 32 lakhs. Net investment done in this case is 30 lakhs. Net sale consideration being 40 lakhs. Come on, tell me the value. Huh? 24 lakhs can be deductible. 8 lakhs will be the taxable capital gain. Taxable capital gain. Taxable long-term capital gain. As on 5/4/26, his friend offered him house worth rupees 25 lakhs. Value for stamp duty purpose is only 14 lakhs. For 15 lakhs. Sonu purchases same. So if he purchases one more house property, automatically he gets disqualified. Now, compute the capital gains in the hands of Sonu for several years. Okay, several years. So next year, in this year, 26/27. In the previous year, 26/27, he purchases, then automatically the deductions claimed will be your long-term capital gain in this year of disqualification, 24 lakhs. 24 lakhs. Now, the house property market value is 25 lakhs, but leave it. Actual consideration paid is only 15 lakhs. But the stamp duty value is 14 lakhs. Always remember, stamp duty value less than or equal to 110% of sale consideration, then automatically what happens? What the sale consideration you say no, it can be taken directly. Else you have to apply section 50C. So it's naturally decent price. Okay, the sale price is more than the stamp duty value. You can consider the actual sale price. No issues here. In 26/27, 24 lakhs is the long-term capital gain. Now, also compute capital gain in the hands of Sonu if as on 5/4/26 is sold newly purchased residential house property. The same 26/27, this new asset sold. Sale consideration being 35 lakhs minus cost of acquisition, in this case being the actual amount he paid 15 lakhs. Which house he sold? Sells newly purchased. So newly purchased house being 30 lakhs. So 30 lakhs is subtracted. So the difference between these two 5 lakhs is the capital gain here. Clear? Now, one more illustration for the same section. Mr. X had sold the following assets during the year 24/25. We have been given land and jewelry and cost of acquisition, sale construction, everything is given. So, sale consideration being, in case of land, in case of jewelry, sale consideration of land being 150 lakhs and this one being 120 lakhs minus cost of acquisition being 10 lakhs, 30 lakhs, 140 lakhs, 90 lakhs. This is long-term capital gain. Is that okay? I skip the indexation here. In the text, I have followed the indexation. For the land, I have followed the indexation. For jewelry, I have not followed the indexation. Okay. So I'll do the same way also, like the solution in text. 150 lakhs, 120 lakhs. Cost of acquisition being 150 lakhs. Current inflation index 363. Inflation index in the year 2003 and 4. Come on, tell me. 109, I think. Now the ultimate value here being 33 lakhs 30,275. Okay. Clear? Oh, 10 lakhs into, okay. 10 lakhs only, right? Then long-term capital gain in this case be 1 crore 16 lakhs 69,725. Okay. In case of jewelry, I take as it is 30 lakhs. Of course, you can do the indexation also. Jewelry sold after 23rd July will not carry indexation. But in case of land or building or land and building, even though if it is sold after 23rd July, you have the option to either go for indexation or without indexation also you can calculate. So it is presumed that land, the assessee avoid indexation. For jewelry, as per the normal provisions, indexation not available. So 90 lakhs. Now, on 31st March 25, he purchased a residential house for 120 lakhs for self-occupation. He has no other house, minus deduction under section 54F. Come on, tell me. 220 lakhs he has invested. No. Now tell me for what it should be used. You can claim the deductions from your long-term capital gain. Now the question is, will I claim for the land's capital gain or jewels capital gain? For what? Then automatically you need to rank it. How can we rank? So for ranking purpose, you have to find the proportions first of all. Okay, what's that? How do we calculate the deductions? Long-term capital gain multiplied by net investment divided by net sale consideration. I have to consider whether the investment 220 is for land or jewelry, right? That's a question mark. Otherwise, you can put that value here. What does it mean? If I do this way, long-term capital gain divided by net sale consideration. So this proportion of investment can be claimable as deductions. If this number is higher, then you can claim more deduction. If this number is lower, you will claim lesser deductions. Isn't it? So for example, in case of land, I am going to rank based on long-term capital gain of such asset divided by net sale consideration. In case of land, long-term capital gain being 169,725 divided by net sale consideration, in this case being 150 lakhs. Get me the proportion here. 77.78 percentage. Okay, 78%. It means for every 1 rupee of investment, you can claim the deduction 77.78 paise. In case of jewel, the same way, your long-term capital gain being 90 lakhs and net sale consideration 120 lakhs, then 75%. From this, for claiming deduction under 54F, you need to claim for the land first of all, for the jewel second. For the jewel second. What is the overall deductions you can claim? 220 lakhs. In that, how much you can claim to the extent of overall sale consideration? 150 to 120, 270. Though it is 270, for the land purpose 150, you know. Balance jewel 120. As per the ranking, first you have to claim for this, second you have to claim for this. But you are not invested 270, invested only 220, so you can claim this one fully. Whatever the balance left you over, no, that can be assumed to be invested and deduction claimed for the jewelry capital gain, which is 70 lakhs. So the investment you made to 20 lakhs is now segregated for land deductions as well as jewelry deductions. While claiming it's for land, it's for jewel, you need to apply the ranking principle. Okay, long-term capital gain divided by net sale consideration. If you apply this in this way, you will be getting more deductions. Now let's see for the land. Now I am going to calculate for the land. Land. Under section 54, F. This formula. Long-term capital gain here being 116,69,725 multiplied by net investment being 150 lakhs and net investment being 150 lakhs divided by net sale consideration also 150 lakhs. So 100% you can claim the deduction here. 116 lakhs 69,725 you claim the deduction, so nothing is taxable. Similarly for jewel, this value being long-term capital gain being 90 lakhs and investment made is only 70 lakhs, net sale consideration being 120 lakhs. Come on, tell me the value here. You will be eligible for 52 lakhs 50,000 only. If you subtract from 90 lakhs, what is the taxable value? 37 lakhs 50,000 rupees. This is taxable long-term capital gain. So to claim 100% exemption, you have to invest 100% of net sale consideration. The 100% of net sale consideration being 150 plus 120, 270. But we don't have 270, we have only 220 to be invested. So you can claim that 220 fully for jewelry, partly for land, or fully for land and partly for jewelry. That's your option. But the most suitable option is, you know that this number should be higher to claim more exemption. Long-term capital gain divided by net sale consideration. If this number is higher to that extent of proportion, you can claim the deductions on your investment. If this is only 10%, you will be eligible for only 10% of investment. If it is 90%, you can claim 90%. Hope now you will be able to understand section 54F. Clear? Now, so we are going to discuss the other comprehensive problems and finally we will go for section 50B, left to be discussed finally, right? Hope now you will be able to understand the summary completely. In addition to this, few more points to be noted here. 4 points are there. On withdrawal of exemption 54B, 54B and 54D, sale consideration minus cost of acquisition being cost of acquisition minus exemption claimed already. That's how we calculated, right? In case of EC and F, the calculation may be pretty different. In case of EC, The deduction claimed will be considered as long-term capital gain. Okay. And sale consideration minus cost of acquisition of the bond will be considered as long-term capital gain. Two calculations will be there. So we have done this one also. Now, the time period of investment under section 54C is 6 months. Some other cases it may be anywhere between 2 years to 3 years. Now the question is, can I keep this in my own hand or in my bank account? No, it is not possible. You have to deposit that amount in a capital account deposit scheme on or before the due date of filing of return of income. Due date of filing of return of income. Deposit unutilized amount in capital gains account scheme. When the need arises, then you can release the fund from here and to use this for the applicable purpose. This will not be applicable for what? 54EC. But for 54EC, only 6 months. On or before the date of furnishing the return of income, if the deposited amount not used for specific purpose within the due date will be charged under section 45. Unutilized amount in CGA's capital gain account scheme. Later on, received by the legal heir on death is also not taxable. In that case, it is not taxable. After the death, if it is transferred to the legal heir, not taxable. If there is any interest on CGA scheme, which is considered as income from other sources. So you have to understand, except 54EC, in all other cases, the amount remains unused, will be deposited in capital gain account scheme. Okay. And in case of exemption under section 54F, we have to use the proportionate exemption method. Now, sometimes no, you sold the asset, but you didn't get the consideration, like compulsory acquisition. So within 6 months, you have to deposit under 54EC, or within the due date of filing of return of income, you have to deposit in capital accounts scheme, or you have to buy the asset, or you have to construct the houses. All these things are 2 years and 3 years there. The sale happened on 1st July 2024, but you got the consideration only on 1/10/2025. Now, within which period you have to invest? From the date of transfer within 2 years, right? In case 54, purchase the new asset within 2 years from the date of transfer. But you got the consideration only on this date, right? Then what can we do? From this date, 2 years will be allowed under section 54H, time extension. In case of compensation for compulsory acquisition, okay, the time limit is calculated from the date of actual receipts of such compensation, is not actual date of transfer. So these are the additional point you have to understand for deductions part. Okay. Now let's start with comprehensive illustrations one after one related to 54EC as well as section 46 both. Okay, section 46 is all about liquidation. If the company got liquidated, you will be getting compensation, right? Or any asset distributed. Any asset distributed on liquidation will be considered as your fair value, fair market value on the date will be considered as cost of acquisition, and other things being same. Aries Tubes Private Limited went into liquidation on 1/8/24. The company was seized and possessed of the following funds prior to the distribution of the assets to the shareholders. Share capital, resource and surplus, excess realization in the course of liquidation being 5 lakhs. There are 5 shareholders, each of whom received 2,60,000 from the liquidation. So 5 shareholders, everybody receives 2,60,000. Okay. The shareholders decide to invest the resultant element of capital gain in long-term specified assets as per section 54EC. Okay. What's the sale consideration? Sale consideration is nothing but the fair market value as in the date of receipts, which is 2,60,000 minus cost of acquisition. What is the cost of acquisition? If nothing stated, we assume these shareholders purchase the asset shares as on the date of issue of the shares. Divided by 5, 1 lakh will be the cost of acquisition. 1,60,000 will be considered as long-term capital gain. Now, can we claim the deduction under section 54EC? Deduction under section 54EC, equity shares, RECL bond, PFC bond, and National Highway Authorities bond, and IRFC, Indian Railway Finance Corporation's bond you can purchase. So how much you can purchase? Okay, here I missed one concept. What's that? Sale consideration being 2,60,000 minus deemed dividend. Isn't it? Under section 2, clause 22, subclause C. To the extent of accumulated profits. Say 3 lakhs is the accumulated profit. For that, 60,000 is for him. You have to subtract this, and 2 lakhs will be considered as sale consideration. This is income from other sources. This will be the capital gains. 1 lakh is subtracted, so long term capital gain being 1 lakh. Okay. Now, what about section 54 EC? 54 EC is not eligible, so the entire long term capital gain is taxable. Entire capital gain will be taxable because this one is not real profit, it's a deemed income. Calculated under section 46, you know it's not real long term capital gain. So, as it is not being the real long term capital gain, you are not eligible for claiming deduction under section 54 EC. So, this is long term capital gain as well as income from other sources being this 60. These two are going to be taxable here. Now, we'll move on to the next one. This question is one of the comprehensive illustration where we are going to cover section 50C stamp duty value, 51 forfeiture of the advance amount, section 54 deductions for purchasing new house property, 54 EC investing in bonds for claiming the deduction. So all the 4 items are going to be incorporated here. Miss Yuvika bought a vacant land for rupees 80 lakhs in May 2008. Registration and other expenses being 10% of the cost of land, so 88 lakhs. She constructed a residential building on the said land for rupees 100 lakhs. This is improvement. Okay, cost of improvement, cost of acquisition. She entered into an agreement for sale of the above said residential house with Mr. Johar, not a relative, in April 2019, which is after the specified date 1/4/2014. If any amount received as an advance and later on forfeited, if it is happening after 1/4/2014, then it will be considered as income from other sources. Beforehand, then it will be subtracted from the cost of acquisition. Now, the sale consideration being 700 lakhs actual, and on 23/4/2019, Mrs. Yuvika received 20 lakhs as an advance in cash by executing an agreement. However, due to failure on part of Mr. Johar, the said negotiation could not be materialized, and hence the said amount of advance was forfeited by Mrs. Yuvika. So then automatically this 20 lakhs, you forget about all these things, only this 20 lakhs is considered as income from other sources. Right. Now, Mrs. Yuvika again entered into an agreement on 1/8/2024 for sale of this house at 810 lakhs and received 80 lakhs as an advance by RTGS, the stamp duty value on the date of agreement. So, if the agreement is entered and portion of amount is transferred through RTGS, then stamp duty value applicable on the date of transfer and agreement made will be final for stamp duty verification purpose under section 56. This is final. The sale deed was executed and registered on 14/1/2025. That is not required for the agreed consideration. However, the stamp evaluation authority had revised the values. Hence, the value of the property for stamp duty purpose was 900. Is not a matter for me. It's not a matter for me. Now 50C is applicable or not? Okay. If the stamp duty value is more than 110% of actual sale consideration, then 50C is applicable. Okay, is applicable. Now stamp duty value being 890, and what about this value? 810, 110% of 810. What is the value? 898. So it is 91. Hence it is not true. 50C is not applicable. Then sale consideration being 810. You can take only 810. You can take only 810. Okay. Mrs. Yuvika paid 1% as brokerage and sale consideration minus brokerage. 1% being 8.10, 801.90 being the net sale consideration. Subsequent to sale, Mrs. Yuvika made the following investments. Acquired 2 residential house property at Delhi for 140 lakhs. Section 54 deduction. How many house properties can be purchased? 2 house properties can be purchased. Oh, sorry. 2 house properties can be purchased, provided what? The capital gain should be less than 2 crores. Now, if I don't apt indexation, I can simply subtract the cost of acquisition, cost of improvement. Cost of acquisition being 88 lakhs, cost of improvement being 100 lakhs. If I subtract these two, what is the final value? Long-term capital gain. 613.90 minus 54 deduction. Okay, as the capital gain is almost 6 crores, you will be eligible for only 1 house property to be deducted. Out of these 2, you can claim this one. And house property should also be purchased before the due date of filing of return of income. So these 2 are eligible, but anyhow you are eligible for only one of these 2. So 140 can be subtracted. Right. And residential house property purchased in UK is not eligible. Apart from that, he subscribed for NHAI capital bond. That can also be deductible under section 54 EC, but the limit is only 50 lakhs. 40 lakhs on this date, another 30 lakhs on the date. But if you want to invest in these bonds, you have to invest within 6 months. Check from the transfer date. Check from the transfer date. What's the transfer date? 14/1/2025. Yeah, of course, only on 14/1/2025, Mrs. Yuvika gets full money, so you can start counting from that date itself. So 6 months means 7th July. So of course you are eligible for both. This one is also deductible. This one is also deductible. 6 months time is there, no, from the date of receipt. So this is the receipt date from there, 6 months. That is for the stamp duty value determination. For investment purpose, you need to get full amount. No, if you don't have the full money, full amount, how can you invest? Are you able to understand the logic? For the stamp duty calculation section 50C, even a part amount received on agreement itself, okay, then that date stamp duty value is final. But as per section 54H, the time extension will be given from the date of actual receipt. The actual receipt happens on only 14/1. Okay. Now from that 6 months time, so 40 and 30 both will be available. Anyhow, 54 EC maximum limit is only 50 lakhs. So applicable long-term capital gain in this case being 423.90. Now if I go for indexation, what happens? 810, 8.1, 801.9, cost of acquisition being 88 into current inflation index 363, inflation index for the year 2008-9, I think 137, the final value being 233.17. Another one being improvement 100, current inflation index being 363, inflation index applicable in the year of construction 10 and 11, this value being 167, the final value here being 217.37. If I subtract these two, the long-term capital gain in this case being 351.36. From that you have to subtract these two. So again, here also your capital gain is more than 2 crores. So you will be eligible for only subtracting one house property. 190 is subtracted. So balance 161.36 is the taxable long-term capital gain. Under this method, you have to pay the tax at the rate of 20%. Under this method, you have to pay tax at the rate of only 12.5%. Come on, tell me, what is the tax amount? Final tax amount? For this 12.5% being 20.17. And what about the for this one? 32.27. This one, I think it's not 52.9. Okay. So we can choose this one only. It's an option. It's an option. Let's now move on to the next one. In this illustration, two sections are covered. Mr. Shiva purchased a house property on February 15, 1981 for 3,24,000. In addition, he also paid stamp duty at the rate of 10% on the stamp duty value of 3.5 lakhs. So 35,000 might have been paid. So the cost of acquisition being 3,59,000. 3,59,000. Is that clear? This is cost of acquisition before the base date 1/4/2001. In April 2010, Mr. Shiva entered in agreement with Mr. Mohan for the sale of such property for this much money, received an amount of 1,11,000 as advance. However, the sale consideration did not materialize and Mr. Shiva forfeited the advance. So this money will be subtracted from the cost of acquisition. Okay. This paragraph. In May 2008, he again entered into an agreement for sale of the house property for 20,25,000 to Mrs. Deepiksha and received 1,51,000 as advance. However, as Mrs. Deepiksha did not pay the balance amount, Mr. Shiva forfeited the advance. If it is forfeited, then automatically what happens? It will fall under income from other sources. In August 2018, Mr. Shiva constructed the first floor by incurring 3,90,000. This 3,90,000 is considered as improvement, cost of improvement. On November 15, 2024, Mr. Shiva entered in the agreement with Mr. Manish for sale of such house for rupees 30,50,000 and received amount rupees 1,50,000 as advance through account payee check. Okay, then this will be final date for stamp duty valuation purpose. Mr. Manish paid the balance entire sum and Mr. Shiva transferred the house property to Mr. Mani on this date. Mr. Shiva has paid the brokerage 1% on sale consideration to the broker. Now, sale consideration, and as the acquisition date is before the base date 1/4/2001, we have to consider the fair market value. So fair market value is higher, then this will be final for the cost of acquisition. You should not take this one. You should not take this one. Stamp duty value was 10,75,000. So while comparing, you have to compare stamp duty value or cost of acquisition, whichever is lower will be taken at the time of acquisition. At the time of sale, whichever is higher between the sale construction and stamp duty value will be taken. In case of cost, whichever is lower will be taken, there whichever is higher. So this is final, not this one. This is cost of acquisition. Further, the valuation as per stamp duty authority of such house on 15th November. 15th November is the date when the agreement is entered and part payment is made through account pay check, was 35 lakhs. And on February 20th, 2025 was 37 lakhs. So this is the second registration date transfer. So registration date value is not a matter for me. Okay. So now you have to cross check whether 50C is applicable or not. If the stamp duty value is more than 110% of sale consideration, then 50C is applicable. Stamp duty value in this case being 35 lakhs. 35 lakhs. And higher than what is the cost of sale consideration, actual sale consideration? 30 lakhs 50,000. 30 lakhs 50,000, sorry. So as it is not satisfied, satisfied, right? So 50C is applicable. Then 50C is applicable. Then sale consideration is equal to whichever is higher will be taken. 35 lakhs is the final value minus brokerage. Brokerage here being 1% on sale consideration. 1% on sale consideration. Sale consideration in this case is actual one will be taken. 30 lakhs 50,000 on that 1% being 30,500. Net sale consideration being 34 lakhs 69,500. And minus indexed cost of acquisition. So the acquisition cost being 10 lakhs 70,000, 10.7 lakhs into current inflation index 363 divided by 100. Why we have taken 10.7 lakhs also be explained properly. Okay. So whichever is lower of, whichever is higher of cost of acquisition, whichever is lower of fair market value and stamp duty value. Cost of acquisition being 3.59 lakhs and fair market value being 11 lakhs 85,000 and stamp duty value being 10.70. Between these two, whichever is lower, between these two, whichever is higher, naturally 10.7. You give that explanation also. As per section 48, as per section 48, as per section 55. In 55, we have studied cost of acquisition as well as cost of improvement calculations for various purposes. Now, the final value here being 34 lakhs 81,170 minus indexed cost of improvement. Oh, here I have to subtract what? This 1,11,000, sorry. From the cost of acquisition, you have to subtract what? Any forfeiture amount happened before 1/4/2014. So here 1.1411 was to be subtracted. So 10.7 lakhs minus 1.11. And on this balance, you have to do indexation. And indexed cost of improvement, here improvement being how much? Here is 3.9. 3.9 into current inflation index 363, inflation index applicable in the year of improvement 1819. In 1819, the value is 280, I think. Then what is the final value? 5 lakhs 5,607. If I subtract these two, I'll get long-term capital loss only. 5 lakhs 17,277 loss. Clear? Clear? Now, let's move on to the next one. 54B. 54B is all about agricultural land, right? So one of the interesting illustration. That's why I included it here. J exchanges his agricultural land being acquired on 1/4/2006. For rupees 40,000 against the agricultural land of Vijay. Okay, so J has given his land to Vijay. Vijay has his own agri land. He hands over the agri land to J. So not in the form of cash. Exchange also considered as transfer. Already we have studied under section 2 clause 47. Exchange, which is acquired on 1/2/24 for rupees 90,000. The fair market value of such properties on the date of transfer being 3 lakhs. Clear? You know that if the sale consideration is non-determinable, you can take the fair market value as on the date of transfer. Let's now calculate for J. Very interesting illustration. Sale consideration where it is not given, then fair market value in the date of sale consideration will be taken as sale consideration 3 lakhs minus indexed cost of acquisition. Okay. So 40,000 rupees in the current inflation index being 363, inflation index applicable in the year of original acquisition 67, 122. Then the final value being 1,19,016. If you subtract this, then long-term capital gain being 1,80,984. Now, will he be eligible for deductions under section 54B? Yes, of course, he is eligible for claiming the deduction under section 54B. He sold the agri land, he purchased new agri land. The new agri land purchased from Vijay, the fair market value of the new agri land will be deductible here. So 3 lakhs can be deductible. So now nothing will be long-term capital gain. Your deduction is restricted to the capital gain only. Okay. You cannot show the negative value. In case of Vijay, sale consideration being 3 lakhs minus cost of acquisition. Cost of acquisition being 90, acquired on 2024 and transfer in matter of 1 year itself. So then it is short term, then he is not eligible for claiming the indexation. The actual cost of acquisition is subtracted, so 2,10,000. Then this is called as short term capital gain. Now what about the deduction under section 54B? Not available. To get the deduction to section 54B, 2 conditions should be there. One is it should be used by him for the agriculture purpose, and it should be used for purchasing the agriculture land only. But he just now purchased. How can we say that he was using it for agriculture purpose prior to that? So he purchased and sold within 1 year. Definitely he may not use it for the agriculture purpose. You cannot prove that it is used for the agriculture purpose, so nothing is deductible. The entire 2,10,000 is the short-term capital gain here. Clear? Shall we move on to the next one? Now, capital gain deposit scheme related question. 16 January 25, Suman sold agricultural land for rupees 22 lakhs. He incurred selling expenses 50,000 rupees. Expenses on transfer 50,000 rupees. 21.5 lakhs is the net sale consideration. Compute capital gains if the land sold was purchased originally on 1st February 2009 for rupees 4 lakhs minus indexed cost of acquisition. 4 lakhs into current inflation index 363, inflation index applicable in the year 2008 and 9.
137.
When the asset sold? Okay, this date. So indexation is not available. 23rd July is the cutoff date. So he is not eligible for claiming the indexation. So entire 4 lakhs is deductible. And the land was used for agricultural purpose by his mother. Yeah, of course, parents also can use. He now sold the, what's the final value? 17.5 lakhs. Long-term capital gain. Can he eligible for claiming the deduction under section 54B? Yes. He again purchased another agricultural land for 8 lakhs. And balance amount deposited in a scheduled bank for capital gains deposit scheme 4 lakhs. Amount deposited can be withdrawn and can used for purchasing new agricultural land later also available. So as per section 54B, this 8 lakhs, this 4 lakhs, 12 lakhs can be deductible. So balance taxable amount being 5.5 lakhs. But out of that, 8 lakhs is already spent, no problem. Another 4 lakhs, you invested, but within some duration. How many years? Within 2 years. Okay, within 2 years, you have to use it for purchasing another agricultural land. You can purchase. In case of residential house property, the limit is 1 or 2 based on the capital gains level. If the capital gain is less than or equal to 2 crores, then you can purchase 2 house properties. But in case of land and means agricultural land, there is no such limit. 1 land, 2 land, such a limit is not there. You can buy to the extent amount available. Here he purchased immediately 8 lakhs rupees worth the land. Another 4 lakhs is invested to purchase later on. It can be used within 2 years for purchasing another agricultural land. Is that clear? Now let's move on to the next one. All the varieties of illustrations included here. If you go and refer your CA book, all the illustrations are already solved. You don't need to further study. Okay. Section 51 and 54 EC. 51 is the forfeiture, EC is nothing but investments in the bond. Mr. Malik owns a factory building on which he had been claiming depreciation for the past few years. It is the only asset in the block. The factory building and land apartment thereto were sold during the year. Okay. Building completed in September 2019 for and land apartments thereto purchased on April 2013. So building completed in 2019, land later period. Is that okay? Now, the main thing you have to note here is, as he uses the building for his factory, office purpose, business purpose, then he might have claimed the depreciation for the building. So building automatically falls under depreciable assets under section 32 as well as section 50 for the capital gains calculation. Land is not depreciable assets, then it will be as per the regular calculation under section 45. Okay, you have to segregate that. Okay. For individual, you don't claim the depreciation, right? So the land and building both put together, you can treat same. But in case of business, land is separately treated, building is separately treated because they could have created the depreciation, claimed the depreciation of the building value. Right. Land apartments there to 12 lakhs. Advance received from the prospective buyer for land in May 2013 50, forfeited in favor of assessee as negotiation field. This could be subtracted from the cost of acquisition before indexation related to the land. Okay. WDV of the building block being this one, so I never bother about the original purchase price. As it is depreciable assets, we have to depend on what? Section 50. Based on the WDV value, you have to calculate. Sale value of the factory building 8 lakhs and sale value of the apartment there too. Now let me finish off the building first of all. Sale consideration being 8 lakhs minus WDV of the block 8,78,800. The difference between these two 74,800. The difference between these two 74,800 negative. This is short term loss, capital loss. In case of land appertinent thereto, sale consideration being 25 lakhs minus when was it sold? November 24. After 23rd July, so you are not eligible for claiming the indexation. So cost of acquisition in this case being 12 lakhs minus 0.5 lakhs. This 50,000 is subtracted as per section 51. So 11 lakhs 50,000 rupees. Now long-term capital gain in this case being 13 lakhs 50,000 rupees. There is a short-term capital loss and we have the long-term capital gain. Can we adjust the short-term capital loss in long-term? Okay. So of course, you can set up this loss here. Then net long-term capital gain after set off being 12,35,200. Is that clear? Long-term capital loss cannot be adjusted in the short-term capital gain, but vice versa is possible. We'll study all these things in the clubbing chapter, means set up carry forward chapter. So by this Sunday, I will finish off income from other sources post lunch session, and I think 50B I cannot complete today, so I'll complete 50B and then we'll go for the income from other sources to be completed by next Sunday. Thereafter, set off carry forward, I need one session, clubbing one session, 4, 5, deductions one section, 3 sections. Most probably by the next Sunday, I try to finish off all the chapters. Okay. Leaving this coming Sunday, the next Sunday will be the final for income tax. Get ready for a summary lecture and finish off the practice session also as soon as possible. Majority content is this one. This particular PGB pen capital gains is getting over, right? Now, the assessee is ready to invest in long-term specified assets under section 54 EC within specified time. Compute the amount taxable capital gain under for the assessment year 25-26 and the amount to be invested. How much it can be invested? The long-term capital gain to the maximum limit of 50 lakhs can be invested. So, if he wants to claim 100% deductions, eligible for claiming 100% by investing 12 lakhs 75,000, 75,200, right? 75,200. Investing in the specified bonds, RECL bond, PFCL bond, Highway Authorities bond, as well as this one IRFC bond, right? Clear? We'll still have 3 more illustrations to go. If it is clear, text me, so we'll move on to the next one. Now here, Mr. A, who transfers land and building on 2/6/24, furnishes the following information. Net consideration received 17 lakhs. Value adapted by stamp valuation authority which was not contested by Mr. A being 19 lakhs. Okay, value ascertained by the valuation officer on reference being 20 lakhs. So this is actual sale consideration, this is stamp duty value, this is valuation officer value. Three values are there. And the land was distributed to Mr. A on the partial partition of his huff on this date. Fair market value will be this one. So the transfer of this house property from huff to A is as per the section 47 transfer. The transaction is not regarded as transfer. In that case, cost of acquisition will be the cost of acquisition of the previous owner. As cost of acquisition details not given as the date of transfer being before 1/4/2000, we can take the fair market value on 1/4/2001 as final rate. And residential building was constructed on the above land by Mr. A at a cost of rupees 3,20,000. Construction completed during the financial year 21-22. Okay. This can be considered as cost of improvement. Short-term capital loss incurred on sale of shares during the financial year is also given. So short-term capital loss is there. We try to finish up the rest. Sale consideration being whichever is higher of actual, and number 2 being whichever is lower of stamp duty value and valuation officer referred value. Net sale consideration being 17 lakhs, stamp duty value being 19 lakhs, valuation officer value being 20 lakhs. Between these two, whichever is lower, 19 lakhs. Between these two, whichever is higher, 17 lakhs will be taken. 17 lakhs will be taken. 19 lakhs will be taken. Minus indexed cost of acquisition. When was it sold? 2/6/24. Before 23rd July. So Mr. A has the options to index, or without indexation also it can go. So as per this option, the cost of acquisition being 1.1 lakh into 363 divided by base value being 100. 3 lakhs 99,300. Indexed cost of improvement. Indexed cost of improvement. Okay, being 3,20,000. 363 in the numerator, and construction made in 21-22. On the date it is 317. So the final value being 3,66,435. If I subtract these two values, the long-term capital gain being 11,34,265. In case of short-term capital loss, you can set off that here. 2,05,000 can be set off. Balance being 9,29,265. Mr. A seeks your advice as to the amount to be invested in REC bonds so as to be exempt from the clutches of capital gain. How much he has to invest? To the extent of taxable long-term capital gain, restricted to 50 lakhs. As the value is less than 50 lakhs, the entire amount can be used for purchasing the bonds. So once he purchases all these things within the stipulated time, 6 months from the date of receipt of the consideration, then you will be eligible for claiming the entire deductions, right? Yeah. Next, we'll move on to the next one. X Limited has building acquired on 17/8/2023 for 5 lakhs. The assessee as a tenant earlier used the building for industrial purpose since last 7 years. So 54D. If the asset compulsorily acquired by the government, then you can of course claim the deduction under section 54D by purchasing additional land and building for the industrial purpose other place later on. Provided you need to use that for your industrial purpose at least for the 2 years. Either you yourself or as being the tenant you can use it. So here you are using this as a tenant for 7 years, so you are eligible for claiming the deduction under section 54D. and it is compulsorily continuously used for industrial purpose and compulsorily acquired by the government, and the sale consideration in this case being 12 lakhs. 12 lakhs. Right. As on 15/7/2023. But the compensation received on this date, 1/3/2025, the written down value of the block consisted of 3 buildings as on this date. So what happens here? You have to calculate opening WDV of the block being 7,50,000. Right. Purchases of new property falling under the same block as per section 32. The company acquired new building for industrial purpose for rupees 2 lakhs on 31/3/2025. Within the year, if any new asset purchase, you can add that. So 2 lakhs and 9,50,000 rupees. This block consisted of how many assets? 3 assets minus sale consideration of one of the assets for 12 lakhs. Now the value is negative. As per section 32, as the value is negative, section 50 will be applicable. Sale consideration being 12 lakhs minus WDV of the block plus newly purchased asset in that block, 9.5 lakhs, 2,50,000 rupees minus 54D deduction. Any new plant and machinery or land and building purchased can be deductible. Here new asset purchased for how much? 2 lakhs can be deductible. Balance 50,000 being taxable capital gain, short term capital gain. Here you have to make a note of it. Newly purchased asset 2 lakhs, subtracted twice. One is included here and subtracted separately under section 54D. As per the provisions of section 32, this was included in the block's value and subtracted. Thereafter, as per section 54D also, you will be eligible for claiming the deduction. Double deductions. Usually in taxation, you are not eligible for the double deductions, but except in this case, all other places we don't have the double deductions. Here, surprisingly, there's a double deduction. What happens if the same asset purchased on 2/4/25, the next financial year? Then 7.5 lakhs, no purchases in that block, 7.5 lakhs. If I subtract the sale consideration being 12 lakhs and the value is negative, so stop there. Go for 50. Sale consideration being 12 lakhs minus WDV and any other assets purchased in the block during the year end, 31st, before the year end. Nothing purchased new, so only 7.5 lakhs is there. And 4.5 lakhs will be the value. And 54D deductions claimable for the newly invested value being 2 lakhs. So taxable short-term capital gain in this case is 2.5 lakhs. A small tax planning. Okay, just 2 or 3 days earlier, if he purchases, then he will be enjoying another 2 lakhs rupees deduction. You understand? Clear? Hope now you'll be able to understand this section 54D. Now let's move on to the last illustration. Let's move on to the last illustration. 54 EC section 45 class 2. EC that investments in bond for claiming deduction. 45 class 2, conversion of capital assets into stock in trade. Okay. Already we studied, but the uniqueness of this problem is we are going to include section 54 EC. Not only that, all the converted stock in trade is not sold. So you know that the capital gain will be taxable in the year of sale of the original stock in trade. If the stock in trade is not saleable or not sold, then it's not taxable in that year. Only portion of the stock trade sold means only to that portion of the capital gain will be taxable. That you have to be careful. Harshita purchased a land at a cost of rupees 35 lakhs and in the financial year 2007-8 and held the same as per capital assets till 31st March 2024. 31st March 24. Thereafter, it is converted into stock in trade. She started her real estate business on 1st April 24 and converted the said land into stock in trade by of her business on the said date, when the fair market value being 210 lakhs. 210 lakhs. She constructed 15 flats of equal size, quality and dimension. Cost of construction of the each flat is 10 lakhs. So 210 is the land cost and construction cost being 10 lakhs each for 15 flats, 150 lakhs is the amount spent. Right. Construction was completed in February 25. She sold 10 flats at rupees 30 lakhs each. So the overall value here being 360 lakhs is the total cost of the means property. Right. Here 10 flats out of 15 sold and remaining 5 out of 15 remains stock. Okay, what's the value here? I think this is 120 lakhs, this is 240 lakhs. Is that okay? Now what is the sale consideration? 10 flats sold at rupees 30 lakhs each, so 300 lakhs. This remains closing stock. This remains closing stock. Out of 15, 10 sold for 300 lakhs and 240 is the cost for construction, including land costs. Difference between these two is your PGBP. What about your capital gain, sir? Sale consideration of your land being converted into stock in trade. The difference between these two. The difference between these two. Okay, 210 minus cost of acquisition. Of course, you can go for indexation. Indexed cost of acquisition. 35 lakhs into current inflation index being 363. Inflation index applicable in the year of purchase. 78. 129. 129. This value being 94 lakhs 48,837. Now your long-term capital gain in this case being 1 crore 11 lakhs 51,163. This is what about the long-term capital gain. Now she invested 50 lakhs in bonds issued by National Highway Authority of India. On this date, another 50 lakhs bonds in Rural Electrification Corporation in April 2025. So you will be eligible for this one only because maximum limit is 50. 50 plus 50, 100. But anyhow, you are limited to only 50 lakhs. Is that okay? Now, how much is going to be taxable in this year? Out of that, taxable being only 10 by 15. To the extent of stock sold will be considered for the taxation purpose in this year. Okay, this is for full property. But full property is not sold. Capital gains tax will be attracted only in the year of sale of the actual stock. If the stock is sold proportionately to that extent of to that proportion of the long-term capital gain is taxable. So here 35 lakhs into 363 divided by 129, the value being 70. What is that? 35 lakhs. Okay. 111 lakhs 51,163. Sorry, this one. Long term capital gain.
Sir, the index cost of acquisition.
Oh, okay.
And an amount balance. 98, 98, 98 lakhs, 48,
Okay, 98. Okay, this one is 98. Okay. Okay then. Now, how much is going to be taxable now? Out of that, only 10 by 15. What's the value? Taxable long-term capital gain.
74 lakhs, 34,108.
74 lakhs, 34,109. And section 50 EC deductions can be claimable up to 50 lakhs. Balance 24 lakhs, 34,109 is taxable long-term capital gain. Long-term capital gain. Is that clear? Balance 2/3 can be sold in the next year. 1/3 can be saleable in the next year. Next year you can claim all the benefits. For this year, you are eligible for this much only. Clear? So all the concept except 50B is